he's going, Brett, this is amazing. I've got financial freedom, but I don't have time and energy freedom. So you're telling me I can sell, pay off my debt, and get even greater cash flow than I was getting on these mobile home parks. And I can go do what I want, right? And I can retire from my W-2. Like, this is truly financial time and energy freedom, right?
Talk about some of the limitations or restrictions, and ultimately maybe we can share one or two cool case studies in the different, arenas of where people are using this to, defer the sales tax and give themselves a lot of, kind of liquidity to go out there and look at things outside of just real estate.
Yeah, and also add too, on the 1031 exchange, it's equal or greater debt, right?
Yeah.
So you don't have to replace
That's a big thing that most people don't realize is if you don't pay that debt off, you got to replace that debt on the next asset.
You got it. And you can't pay it off at close of escrow, right? And so people go, well, what, can I just have escrow pay it off? No. You've got to actually have it paid off prior to, let's say, 30 days before you close. That's not on the closing statement on the debt. And in that scenario, you have to replace the debt and replace the value. Yeah. So I think the biggest thing, Matt, is sometimes people go, well, then why wouldn't everyone do the DST? Well, it depends, right? Let me talk about who wouldn't do it, right? First, you have to have a big enough transaction. You got to have $1 million net proceeds, $1 million gain. Like, you need to have a larger transaction. For smaller deals, this is a more specialized, and it's not cheap. It's about 1.5% to set up on the front end, about 1.5 to 2% on the AUM, or on the recurring on the net proceeds. So it's not an inexpensive option. Now, we teach you how to make the DST an investment and not an expense, and how that all fits together. But it really works for the entrepreneur, right, who wants to get time on their side. It also works for the person who wants to be retired and wants to, be passive, or maybe a mixture of both. We have a lot of clients that when they approach and they see the DST for the first time, they're saying, Brett, I have the kids that are between 8 and 10. I've got about, 8 years left before they're 18. And I've built up this business, this real estate, and I want more time with my family, because 85% of our time with our kids is before they're 18. That's for their entire lives. And so for them, it's a lifestyle shifting, not so much like I want to retire, but I want to free up my time and energy by selling this business, this real estate, having my wife or spouse retire from the W-2. And if I can have this big capital event where I don't have to be so hands-on on it with everything, and get passive cash flow, truly passive cash flow, right? No toilets, trash, liability, business, employees, all those different things. Wow, I just freed up this season of life that I'm never going to get back in return. And so we had a client, another client, he sold a mobile home park in Idaho. And for him, he had a W-2, and he went to this mobile home park seminar 10 plus years ago. And he bought his first, his second, his third, his fourth. He bought 5, built it up to about a $10 million total valuation. I think he was in it for about 3 or so, right? Basis. And so he's going, Brett, this is amazing. I've got financial freedom, but I don't have time and energy freedom. So you're telling me I can sell, pay off my debt, and get even greater cash flow than I was getting on these mobile home parks. And I can go do what I want, right? And I can retire from my W-2. Like, this is truly financial time and energy freedom, right? And so those are a couple of things that come to mind on that one. We had another deal actually in Placerville, California. It was Warren and Catherine, and they were selling a $2.5 million multifamily property. So I actually listed that property and laid out the scenarios for the 1031 versus the deferred sales trust. They had 2 twin daughters, a little bit older in life, but they had 2 twin daughters a little late. And the same thing happened. He goes, like, I'm trading my time and my energy with toilets, trash, and liability, driving back and forth from the Bay Area. My NOI is about 120,000. He goes, with the DST, I'll be about 190. And the biggest thing, I'm not trading my toilets, trash, and tenants for my 2 twin daughters, right? I'm getting my time with my twin daughters. And so I said he really did the right T's, right? He focused on the right T's, which is his twin daughters. And he goes, Brett, this is amazing, right? I don't have to own in California anymore. I don't have to deal with the fires that were threatening to burn down Placerville, the insurance costs, which is skyrocketed, the rent control. I mean, the list just keeps going on and on and on for why it's not great to do business in New York or California or New Jersey. And so the DST is truly that freedom for him, for his family, for a truly kind of holistic wealth, retirement plan.